Hello, traders. Happy Friday. It's 8:09 a.m. We're about 9 minutes late this morning, 8:09 a.m. Chicago time on Friday, the 1st of February, 2019. Welcome to February, coldest month of the year, supposedly, even though this week has been just amazingly cold here in Chicago. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick recap for those who haven't been here before. My background is in prop trading, initially equities and then futures. Focused on futures since 2002 or three, and I've been trading them ever since. Have not gone back and traded equities again. The reason I'm talking to you is because my aim here is to provide a consistent and repeating process for preparing for the day, setting out your big trades of the day that you anticipate, and then responding to market action when it happens, as opposed to coming in and just kind of staring at the screen, feeling the urge to trade, putting on a trade, and then not knowing what to do with it, which is oftentimes a complaint. I came out to the public in 2008, and I've been speaking very openly and honestly about trading and what it takes to be a professional trader. And my entire goal is to address this issue for those people who are serious about learning. So that's why I'm here. Let's get into the business of what we've got this morning. We had a pop up on Nonfarm payrolls. Nonfarm payrolls came in very strong this morning. We had a release that showed 304,000 versus 165,000 expected. The unemployment rate ticked up to 4% from 3.9%. Hourly earnings came in weaker at 0.1 versus 0.3 month on month. So this caused the market to pop up a little bit. We moved from about somewhere around 2,700, the century figure. I have the SOC at 2698. That needs to be verified, 2698.75. For the non-farm payrolls, I was comparing notes with another head trader at Convergent, and we have divergent opinions of what the SOC will be. I'll check that with another data source. In any case, let's say it's around the century figure, and since then we have pushed up about 10 points and are holding sideways into a tight pattern in the overnight session. Yesterday's high is 2709, so we pushed right into the 2709 on the non-farm payrolls. As far as looking ahead and what we could expect for today, again, we did have the biggest figure already release, and we're looking at market manufacturing PMI at 9:45 Eastern, looking at ISM manufacturing new orders, ISM manufacturing prices, and employment at 10 Eastern. So ISM manufacturing PMI will be the figure at that time. Also, Michigan consumer expectations, consumer sentiment at 10 o'clock. That's another one. And wholesale inventories. So there's a lot going on today. We get vehicle sales at 3 p.m. Eastern. A lot going on here today in terms of just after the open. Um, so that's what we've got. Let's take a look at what we expected yesterday versus what actually happened, just for accountability and also so we can build our context for today. The prior day, strong pop up on FOMC, push to the high that we had at the time, and then we pulled back and held a flag up top with a point of control that's pretty sharp on the upper distribution. We were opening around 2677 yesterday. The primary expectation is a push up and then a drift down following the FOMC release. I expected that the market would likely digest that and then pull back into the 2667 area before the bounce. That did not happen at all. The secondary scenario is to pull back towards the beginning of the single prints down to 2674, and then come back up, consolidate, and then continue higher, which is basically what we got yesterday. So here's a view of what we've got. We opened at 2679, pull back to 2676.50, could not get down into the 74. So just unable to unable to push and hold lower. So scenario one's out of the picture. And then it starts to get strong. We start to see from the very open that the delta is very strong. Let me adjust the scale a little bit to the way I like it. I had to restart my charts. I accidentally tapped the off button on my computer and ended up shutting everything down. I got to reprogram that button. But you could see that delta was strong right off the get-go. And so those of you who are convergent, I was warning early on to just forget about the short side, just let it go, and look for longs. Very difficult. I found it very difficult to find longs in here. It was moving away very quickly from areas I'd lean against to get long on pullbacks. Pullbacks were very poor, very shallow, until we until we came right back into the IB the first time and then the second time. So there was nothing to do really. A day like yesterday, the way it opened, the way it ran away, those are my least favorite days because I'm not a breakout trader and I don't like to trade away, very far away from my stop point. So getting in anywhere between 2685 and 2695, where do I put a stop? It's just not my style of trading, and I've dealt with the FOMO issues a long time ago, and I'm not going to go back for the sake of being involved and risk a very wide stop on a trade that is not mine. So nothing to do until we pull back into the IB, and then later on the IB. Uh, the IB, there was a stock zone here. These stock zones have been adjusted. There was a stock zone at the IB, which was set pre-market, and that created a perfect setup for a long into the close. So we closed right around the century figure, and we're trading higher. That's how things are looking. Now, to look at the big picture, what are we doing, right? So let's kill this trend line. It's no longer relevant. Another trend line should go up here. But we can see that the market's one-time framing up on a daily basis. It's been doing so since since Monday. Monday we gapped down and started to move into the gap, and we've been holding higher lows, and we're pushing towards 27.35 and a quarter. I mentioned that over the last few sessions. We're above the 50 SMA in the futures. We're just below the 200 SMA, which is hovering around 27.50. As I said, 27.35 is the big magnet now that we're inside of the microcomposite. This microcomposite here, which has lived here since October. And that's the action is quite bullish. Of course, the FOMC helped that out quite a bit, but the market was already kind of squeezing to the long side. If we look at yesterday's action, when we're looking at these rotations, this is a 4-tick Renko. I wanted the 2-tick. Much easier to see. As we look at the rotations in the morning, let's back this up. As we look at the rotations in the morning, we can see there's a two-way fight here at the open. Okay, so it's an open auction right on top of the point of control. Let me kill these zigzags. open auction right over the point of control, quite balanced, and then it starts to push up and through the opening swing high. I lost the line for the opening swing when my charts reset, but the opening swing high is right up here at around 2680.50. And as soon as we break out of the opening swing, you can see that the rotation's up plus 4.75 minus 2.5 plus 5.25 minus 2 and so on plus 5 minus 2. You can tell from the rotations that the market's facilitating trade to the long side much more easily than the short side. It did not start facilitating trade to the short side in an equivalent kind of basis until well into the afternoon, right in here. Right in here, we started to balance out. Once we put in this high, we started to balance out. You can now see that the rotations down are equaling or bettering the rotations up. And this is when it starts to get safer to take shorts. Before there, I just didn't see an opportunity to get short. It's, keeping track of rotations is it's a very good skill to have, and it's a very easy thing to study. I would strongly recommend that those of you who are trying to figure out more, model some very specific ways to look at when the market's mood is changing, to study rotations. Very, very important in the way I'm approaching the market. The overnight session, we open up, we push to 27.1175. We did have an impulse up that did not complete itself yesterday. We flagged, and then we finally push higher, did it overnight, and then we come right back into the range here and just stick inside of the range for the rest of the session. It seems like buyers were not able to step in and hold prices above yesterday's range, and the Europeans came in right in here, pushed to yesterday's high, and have been holding beneath the mid and VWAP in range until the non-farm payrolls release right here. Now we're flagging. So the profile overnight is balanced to P-ish shaped, but this isn't a valid P shape because the stem is being built later in the session as opposed to consolidating at the open, moving up, and then consolidating for the rest of the session to give us a nice excess low with a P-shape high. So don't look at this as a P-shape. I would look at this as a balanced profile in the overnight session. The volume is okay, 234,000, a little elevated, which is nice to see. So we might see some action or some follow through. But overall, the overnight session tells us that we're accepting prices higher. We've remained in balance in anticipation of the non-farm payrolls, and we continue to stay in balance. It seems to me like it is just having a hard time pushing through. Let's look at the current as we approach the open here. We did move away from the SOC, the non-farm payroll SOC. Have not tested it yet. It's going to be very hard. It's going to be very hard to determine what is likely to happen this morning. So with the non-farm payroll release and the fact that we couldn't push and hold above the prior day's high, it shows a little bit of weakness. We've spent almost the entire session, except for the little bit in the beginning, on the reopen inside of the prior day's range, and here we are still. We're holding near the overnight point of control. We do have really good fundamental news, though, on the non-farm payrolls. The point of control is just beneath us here at 2698. My primary expectation is an open auction that is likely to push higher, take out the overnight high, push into 27.14.15, push back into the range, consolidate, and then come back in line with yesterday's point of control before it bounces back up. It is non-farm payroll Friday. Most of the movement's likely to happen in the first hour, and then we're likely to just kind of sit around and balance out for the rest of the session. I don't expect another run. A trend following a trend is not likely. A trend following a trend following a trend is not likely. So I'm looking for this to push higher and then come back in. The secondary open auction that pushes right above the prior day's high and then comes back in a lot earlier, consolidates for a good portion of the session here at the 26.96.98 area, and then starts to fall through to 26. This single print 26.91 consolidate, and then there's the potential that it might start drifting down a little bit. But in either case, in this scenario, I'm only looking to the short side. If it does poke up and comes back, I'm going to be pushing the short side. Scenario 3, because we're up here, scenario 3 is a reversion back towards the point of control that impulses out and then holds the prior day's high and then starts drifting up and into 27.17 in that area, and then consolidating up here quite bullish as a continuation of what we've seen for the last couple of days. That's what I'm seeing. I'll let you go. It's getting very late. Those of you who did not attend the AMA yesterday but registered, you will get an email with the recording. The AMA was about execution. That recording will be released today. I'll catch you tomorrow. Don't forget that it's Friday, and don't forget to hit the like button today. It's really important that you take a moment and just hit the like button on YouTube. It does help me out. Good luck. Make sure you don't get caught up in your emotions today. It is Friday. It is non-farm payroll Friday. There may be quite a bit of chop. Good luck. Take care.